few charts. Today is February 10th, 2016. We're going to take a look at the Dow Jones Industrials. Today was another volatile day. It was up 200 points or so in the morning, and it faded all through the day as Janet Yellen revealed her testimony, admitting that the U.S. economy is weaker than what they previously anticipated. No surprise there for us. I mean, we've seen all this in the charts. The Dow, I still think, the general market, I still think it's behaving much the same as it did back in September, October time frame, where it consolidated after a nasty plunge. I think there's about a 35 to 40% chance that it still rallies off of this support level here and goes up somewhere around 17,000. As time unfolds, it becomes less likely that it'll recover to a higher level, simply because the moving averages are now moving decisively in bearish fashion. Both the 50 and the 200 are pointing down. The 50 is pointing down in a very serious way. Both of these will prove to be resistance on any recovery. So the 50-day, for example, has moved down just in the last month from 17.5 down to 16.860, which is pretty serious. So there'll be lots of resistance up here. A lot of people that have wanted to sell that didn't. We can take a look at Amazon. And from our earlier review, we were anticipating that after the earnings came out, it was behaving very bearishly, and it has since plunged below the 200-day moving average, all the way down to the 470 area from 700. I mean, that's a serious haircut in 6 weeks. And it tried to rally today. It was up as high as 505 area. A low of 486, closed at 490. So the range is narrowing. That tells me there is scope for a recovery here. I don't think it's going to be anything huge, just like the general market. The 2016 has not been a good year for stocks so far. We've had some serious problems. Netflix, another situation that has been overbought by a lot of the general public buying this that don't know the first thing about stocks in the first place. Yes, there certainly is room for some recovery here. I mean, it's a bear market. Rallies can be quite severe, and it could take it up to the 105 level. Nobody says it's going to stay up there. It wouldn't surprise me to see it rally. But it wouldn't be anything long-lasting, though. It'll be over fairly quickly. In fact, these type of moves, generally what will happen is it'll hit those levels early in the day and close substantially down on that day, therefore making a bearish candle on the chart. Pretty much like it did today, actually. I mean, you could say that this rally attempt has been very feeble so far, and there's a lot of technical downward damage that's been done. So the prognosis is not too good going forward here, but I will say that we are very oversold, and we certainly could have a bounce that would take us up, but there's no guarantee that's going to happen. Let's look at the Russell 2000. The Russell 2000 continues to exhibit terrible price action. This is what's going on underneath the hood in the markets, and it's not a pretty picture. We have the Russell 2000 very close to its plunge low of January 20th. It tried to recover somewhat, has not been very successful. It's just a few points away from a serious support level being breached here. The 50 and the 200 day are clearly pointing down. I would not want to take any kind of a serious long position in this market. There's just too many negatives. Now we can look at something that looks a little more interesting. We have the price of gold over, this is a monthly chart going back a little ways here. It's about 6 years. And we show that it has in fact broken out of a falling wedge, which is a bullish pattern. According to this, the measurement implications of such a pattern could take gold up to 1550. I know that sounds a bit absurd, but it's not out of the question. We have broken above this level here. We are in fact sitting as we speak at about $1,200 right here. So we've clearly broken out of here. The stocks are acting beautifully. This morning, for example, gold was down at 1181. It wasted no time getting back up to 1200. The likes of Barrick sold off a bit in the morning, but certainly by the end of the day they recovered fully, and as a result, the action is consolidating in this upper level here. It has not given up its gains. It may continue to consolidate for a few days. We have the 50-day now that's just crossed over the 200-day in the last 2 or 3 trading days. And the 50-day is now starting to trend upwards very, very nicely and very bullish. Note the amount of high volume here today. We're trading 6-7 million shares a day now of Barrick. The market is entitled to a little rest here and there. There's nothing wrong with that. In fact, it's healthy. But I think we're in a serious bull move here, and I believe that the index, the gold equities, will not allow people to buy them too cheap now that they've broken out. Now that they've broken out, they will be very, very technically sound at the higher levels. They will not want to give up much ground. So basically, these type of moves, when you get the serious breakout like this, you want to buy. You don't want to just wait for the pullback, wait for the pullback. I mean, the pullback won't come until we get to certainly much higher levels. And then when it comes, here's Goldcorp again. You can see now this morning it sold off down to here. The volume was quite light on that sell-off, and as the day wore on, money moved into the gold stocks once again, and Goldcorp closed right close to its high for the day. So when you concentrate, where we're at, where we closed today, and where we traded at the recent high here, 21, we're consolidating in a very, very narrow high range up here. So I think Goldcorp is certainly should be bought. You would have had a great chance to buy it this morning, but anything over 200-day, close to the 200-day in these golds right now is going to prove to be a very good entry point. However, I wouldn't get too cute with this market. I wouldn't try to suggest that it's going to give you some bargains. I think the bargain days are over for the gold stocks. Here's IAMGOLD, same deal here. Look at the rising volume you have here. I mean, this is beautiful. And now you have today it closed up 21 cents, 288, very close to its recent range high. These things are all going to make beautiful moves here, I believe. A year from now, we're going to look back and we're going to say we should have loaded up the truck twice. Here is Kinross Gold. Same deal. Now they came out with earnings, so we're not going to know how the stock's going to react to those till tomorrow. But certainly any pullback, if the market gives us anything here, you have to take it. And you have to be thankful about that, because this isn't a flash in the pan rally anymore. This is serious business. Now we can look at USO, which is the United States Oil Fund, which is a barometer of the oil market, and you can see that it's just steadily down. This is your 50-day, your 200-day. There's a wide gap between the two. We've closed now below the low of this range, low range of January 19th. I don't think oil has finished bottoming yet. It's probably in the early stages of getting to the point where there's less downside risk, but it could take quite a while to work this through. So we could look at McEwen Mining. Same deal here. We're really getting a beautiful volume here. On these strong rallies from $1.40 up to $2.20. I mean, that's a serious percentage return there in only a couple of weeks. So people are starting to take notice when the mutual fund statements come in of all the unsuspecting holders, and they notice that they're holders of small cap stocks and they're down 20%, because a lot of the mutual funds are loaded up with pure junk that they want to tag along and sort of get rid of. And I think that a lot of people are going to realize that the general market isn't the place to be. So that about wraps it up for tonight. We're going to be watching this market with intense interest. We have performed beautifully in the last couple of months, and I see no reason why this market will not continue to perform well. We may have a multi-year bull straight in front of us. And there will be pullbacks, but they have to be bought. Thank you for listening.